please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. We are in for a bit of a tough opening, of course. Let's see how things go from here. Girish Pai of Nirmal Bang Institutional Equities is with us now. Girish, good morning. Let's start with some of the consumption numbers like Britannia. Your thoughts on how to approach these stocks from here?
So I think if I look at the earnings season, I think one pocket of the market which has done exceedingly well from delivery versus expectations. I think that's been the consumption side of the market, be it the consumer staple side, be it consumer durable side, be it consumer discretionary, which could mean autos, as well as we look at a space called film exhibition. I think those 3-4 areas of consumption have done exceedingly well. I think the key number which kind of surprised the market and has led to some kind of, I won't say euphoria, but positivity has been the 11% volume growth one has seen for HUL. So I think across the board we've seen fair bit of positivity coming through. Obviously one has to take into cognizance the fact that the base quarter numbers were probably a tad poorer because of the impact of demonetization in the fourth quarter of FY17. So I think the numbers have been fairly good, be it HUL, be it the consumer durable names like Whirlpool. We've seen good numbers come through from the auto side. So we are fairly positive on that space, and I think the quarter's numbers have been good. Looks like the outlook for FY19 also looks fairly interesting.
Okay. Girish, what would your take be on outside the consumption space? I mean, Lupin was still bad. Is there anything in the pharma space that you would now start nibbling in? I mean, because the dollar, obviously, the weakness of the rupee should mean a little more money.
Yeah, so pharma has been a perennial positive area of the market for us for the last 2 to 2.5 years, but that space has not really delivered, be it from an earnings perspective, or from the kind of molecules that it's going to bring out into the market. So there have been issues in terms of pricing pressure. Both pricing pressure has 2 angles to it. One is the consolidation on the buyer's side. The other is the fact that there are more molecules in the market, even in areas which were not previously very competitive, areas which didn't have as many competitors in the past. The fact that FDA is now leading to, FDA is allowing a lot more players in certain areas of, the pharmaceutical market would mean that there is structurally more competitive pressure out there. So I wouldn't recommend, unless you are a 3 to 5 year view kind of an investor, to look at pharma, though I think officially we are positive on pharma. We have a fairly large upside for a stock like Dr. Reddy's, Cipla. So those are the large cap stocks we've been kind of pushing.
Lupin.
We don't have Lupin under coverage, so I really can't comment. I don't have too much to comment on Lupin specifically.
Okay. All right, we'll just come to you in a second. The markets have opened and it looks like a big negative now. 10,745, but we have to allow it to settle down simply because the Sensex is actually showing a little bit of positivity. ICICI Bank is starting with 3.5 down. iShares, Kotak, I don't think it's going to pan out this way at all. Maybe we want to look at probably Britannia. Oh, that's the rupee. It's opened with a new low, probably a 2018 low. I don't know, but it's clearly indicating the weakness, or rather the strength of the global dollar position, and therefore more weakness in the rupee. IT should benefit, but at the moment it's all the safe stocks. NTPC is higher, Hindalco is higher, Bajaj Auto, Coal India. I think we just have to wait a little bit to let us know what the markets are thinking.
It's the entire PSU banking lot that's actually under pressure today. Allahabad, PNB, Andhra, all of them. I think after that shocker that came in from PNB, that soured the sentiment across the board. And on the upside, just take a look at some of these names: Endurance Tech, Britannia, Fortis Healthcare, and you also have names like Crompton Consumer that have done well. Girish, hi, good morning. Wanted to ask you a little bit about the NBFC space, because over there you had really good numbers this time, whether it was the likes of Edelweiss, L&T Finance, Ujjivan, etc. What's your top bet there?
So obviously that space is going to be under pressure from a cost of funds perspective. So the fact that rupee is at 68 plus and interest rates, I mean, especially the 10-year yields are close to 7.8, 7.9 would mean that cost of funds would come under pressure. But having said that, there are 2-3 areas of the market within the NBFC space that we like. One is that pocket which has got fairly good control over cost of funds. We like stocks in the housing space like PNB Housing and Canfin. We're not talking of HDFC, which is a behemoth out there. Within the mid-cap housing space, we like PNB Housing and Canfin Homes because they've got fairly low cost of funds. The other area within the NBFC space which we like is, you know, the small finance banks. We're talking about Ujjivan here specifically, and the gold finance space where we think that the yields are high. So to that extent, we think that cost of funds really don't matter too much. So these are two, you know, bell bar kind of a situation. One where we have NBFCs which have got fairly good control over cost of funds. The other is where, you know, there is pricing power within the subsegment of the NBFC space. So gold finance, certain small finance banks which are focused on MFI related lending. The other is the housing finance space where we have Canfin Homes and PNB Housing where they have fairly good control over the cost of funds. These are the two pockets we kind of like right now.
Okay. When you say PNB, you don't think of fairly good control over cost of funds. It's a little scary, the two together, but of course, this is the subsidiary. Before we advance any further, let's also put the commodity cues on the table. They are important. Manisha Gupta is joining us. Manisha, what's the trend on crude likely to be?
Thank you for that, Lata. Well, the major cues really are coming in from the US dollar at a 5-month high, as the US Treasury yields above 3%. And you have seen the metals and other commodities actually struggle because of that. For the crude oil prices, well, we did see 79 plus kind of levels yesterday, but just about holding 78 right now. And the profit taking is coming on the back of reports that suggest that the spot crude oil prices are way more at a discount than the futures or the financials. And in that case as well, you have the Brent prices trading at a $7 premium to the US crude oil prices. It's at a $4 premium to the Dubai crude oil prices. If you look at the Asian crude or the Russian Ural varieties, etc. as well, they are at multi-month, the discount for that matter is at a multi-month high. So that is what is bringing a bit of a caution into the markets on whether or not we will see convergence between the physical and the financial markets there. Apart from that, the supplies have been increasing. If you look at the API data, the US inventories have increased by 4.9 million barrels in the previous week. The outlook also is on the higher side when it comes to these weak inventories and supplies. So that continues to put a tap on the crude oil prices there. But the metal space is struggling. You have gold prices which have broken below 1,300. We saw a low of 1288 in the New York session yesterday. So while of course the crude oil price is on the higher end of the range, it is the metal space which is under pressure today.
Okay, thanks a lot for that. But I think just after that first opening of 68.14, it looks like currency went to 67.90 also.
Yes.
So either it's a free trade or the Reserve Bank was supplying dollars. We don't know as yet. But it's important to note that the dollar suddenly got cheaper.
Oh, yes. Of course, you know, if you see on the NSE, it trades in the futures also at 9 a.m. and you saw that big red bar on that on the technical chart as well on dollar rupee. So obviously there's been a bit of a recovery because from the low yesterday to low yesterday was 67.39.40 to 68.15.20. I think just one big move, which is interesting.
But actually, it moved lower through the day.
Yes.
It was not as if it was a last-minute selling or something.
Yes, it moved through the day. It was a one consistent linear chart.
So therefore, it looked like the market was not convinced of its levels. But anyway, here, the market is, I guess, happy with Karnataka Bank's numbers for sure. A fairly decent growth, considering that it's coming in a space where there have been some difficult numbers. Advances for the year up by 28%. Deposits are up about 11%. But there is a divergence. Let's invite Mr. Mahabaleshwara, the Managing Director and CEO of Karnataka Bank. Good morning, Mr. Mahabaleshwara. First, let us go through the asset quality. How come you're not affected by the February 12th circular at all? We are not seeing any deterioration in your asset quality?
No, yes. Actually, it was really a tough quarter. And we have been able to sail through safely. As far as the asset quality, let me just...
what were your slippages actually?
Yeah, actually it was the quarter wherein we had highest slippages. It was, in fact, we had taken a decision to identify all the stress and come out with a clean balance sheet.
But how much was it? How much was the slippage?
Yeah, it was around 1,037 crores was the gross slippage, and the net slippage was 591.77 crores. As against this net slippage of 591.77 crores, we have provided for 590.38 crores. This is one of the highest provisions that we have made during the current quarter.
Okay.
Nevertheless, with this, even though there was a slight increase in the NPAs, the gross NPA is well within 5%. So now it is at 4.92%. So also the net NPA. Net NPA is also well within 3%.
Okay. So, Mr. Mahabaleshwara, will you make further provisions for any of these NCLT accounts as we head into the next few quarters? And also, your provision cover ratio is quite low at about 40% or so. When can we expect it to move up further?
Yeah, as far as NCLT cases are concerned, we had 4 accounts.
Okay.
Under these 4 accounts, we had about 317.46 crores. All these accounts are treated as NPA, of course, DS2 and DS1. Accordingly, the provision, adequate provision is made for all these things. In the sense, all those accounts which are having security, the 40% coverage is made, and where it is not covered by security, 100% provision is made.
Okay, so your provisions are likely to remain high for the next couple of quarters, isn't it? Because you're only at 41 at the moment. Do you have any hope, any aim to take it to 60 or 65%?
No, not like that. What I said is for NCLT cases...
No, I agree. I got that. I'm asking you, generally, are you looking at raising your provision cover?
About 54 to 60% is ideal for us because around 93 to 94% of our advances portfolio is a secured portfolio. So even when the slippage happens, so then there will not be much pressure on this provision side.
So in terms of stress, just one follow-up question. A lot of bankers have been telling us that there is still large amount of stress in the power sector. What has your own assessment been?
So in the power sector, I had 2-3 accounts. I have already treated it as NPA. So there was one account with around 176 crores of exposure, another account with 119 crores, another account with 17 crores. So 3 power sector advances. We have already identified the stress and categorized it under the NPA, and adequate provision is made. And no other accounts is showing any element of stress in the power sector portfolio as of now.
What was your net interest margin for FY18 and what is likely in FY19?
See, FY17 we had 2.79% NIM and it improved to 3.18%. But interesting thing is during this Q4 of FY18, it improved to even up to 3.54%.
All right. Okay, we'll leave it at that, sir. Thank you very much for joining us with all those details. So that's Karnataka Bank saying that they took a decision to recognize almost all the difficult cases because of the February 12th circular, and slippages therefore mounted to 1,037, and the GNPA also went up to 4.9%. Well, let's concentrate on the markets yet again, and they are settling around 0.5% lower, 50 points lower. Ashwini, what would the trade be now at 10,750? Is it good to go long actually intraday?
See, that we'll have to see how it opens and where it goes. But if you took home short positions, I think early morning you are hitting a target. So that way, Nifty, Bank Nifty, you should cover in the beginning and then see what happens. Either it will be a shallow bounce which will start filling again. In that case, you take fresh shorts, or you will start seeing a strong bout of short covering, and the market will tell you that it's sideways and it's going to the upper end of the range.
Okay.
Having said that, 914, you should sell into a Canfin home with a stop of 385, target of 370.
Okay, that's a good point to focus on. Couple of stocks, MRPL is down about 4% in pre-opening after the results, and also Syndicate Bank is down about 2.5%. Ashwini, this call on Canfin Homes, would you extend it to other NBFCs as well?
I would think so. NBFCs now, since the market is not there to hold them up, they should have a fairly bad day. But it's interesting that Bajaj Finance, FinServ, they are not doing so badly. So even within NBFCs, certain stocks may get away with lighter losses.
Actually, just to point out for the NBFCs, the opening of the bond market has not been terrible. It's actually moved below the 7.9 mark to 7.87, if that's any immediate solace.
The rupee is now strengthening like anything. It's now, in fact, 1/3 of 1% move that you're seeing. And in fact, from the high point, it's almost a 40 paise move from the absolute, high point, 68
and that I think is
thereabout, to 67.89. Could be interesting. This could have, repercussions, of course, for Nifty as well, which for now is opening about 200 points lower. Sudarshan, your thoughts on market opening and any stock that you would be watching out for?
Yes, two stocks, both for selling. One is Indiabulls Housing Finance and the other is LIC Housing. That NBFC theme is now collapsing on the downside. I would be looking to go short in this market, not necessarily at the open, but whenever the market consolidates or actually has a small rally, that should be a shorting idea.
Okay, well, just about a minute and a half left. Mitesh, your quick thoughts on a couple of these stocks in the broader markets, Britannia, Endurance Tech, Crompton Greaves, good numbers. Anything that you would trade today?
I think Britannia is interesting to me. If it starts getting past 55.20, I think there will be some breakout on the intraday chart. So that I explore on the long side. That about, I think, Indiabull Real Estate, I'm not very sure. I think the stock is close to support levels, but the structure is slightly negative. In case we start getting below 180, then I think that would be a short call.
Okay. Girish, finally, over the last 1 week, what was any of the mid-cap result that stood out for you? Any sector or stock that you would like to buy?
So I think one of the stocks that we've kind of been pushing has been Solar Industries, which is a player in the industrial explosive space whose results came out yesterday. Very good set of numbers for the quarter, almost I think 25-30% kind of YOY growth, driven largely by its overseas growth, where it's expanding pretty frenetically, where it's talking about a 3x kind of a revenue increase between FY17 to FY20. And the other space within Solar Industries which has been growing is the package explosives space, which has been driven by the road building and housing growth that one is seeing in India. So Solar Industries is a fairly high quality mid-cap story which has been compounding earnings at a fairly good clip over the last many years, and that's a stock we would kind of recommend.